get into this introduction on income tax filing on salaries. Okay. I tell you what exactly this income tax is. Now, before getting into this filing of income tax returns, let us first try to understand what exactly this income tax returns and income taxes. Because filing of income tax returns on salaries, it's quite an easy task. Just you can open the software or you can just open the return filing portal and you can just key in the numbers and you can file the returns, which anybody can do. But you need to understand the topic behind it. Unless and until you understand the topic, the rationale, the logic behind that, there is no point in filing the income tax returns. And we, being the professionals, we are in the leading seat. We need to lead to the society. We need to lead the society. We need to educate the people. So we should understand the topics and the rationale and the logics behind that. And after knowing that, if you file, that really makes sense. So the first half of the session, we'll be dealing with the knowledge, with the subject, what exactly the salary, what is income tax, how to work out the income tax, how to compute, what are all the exemptions, what are all the deductions, what it is. Just in general, we'll not be going in depth because the time and the scope is not ready for that. So we may not be going in depth for that. But still, we may be covering just the snippets of the topics, whatever I said. Now, income tax on salaries. I tell you what exactly this income tax is. Income tax, as the name suggests, it is tax on income. Simple. It is tax on income. Whenever there is an income, there is a tax. No matter what it is. No matter what it is. Whatever it may be. If there is an income, there is a tax. You may work for a company and you may get a salary. You may do a profession and you get some professional fee or something. You may get remuneration. You may be a doctor and you may get a fee. You may get some interest, or probably you may be a beautiful singer and you can participate yourself in Airtel Super Singer or some other TV shows and you can earn some income. But so all those incomes are taxed. All those incomes are taxed, no matter what it is. So the Income Tax Act has divided the income, has segregated the income into 5 different heads. Many of the people may know the different heads of income and all, but just for the sake of the understanding of the larger crowd, I'm forced to tell you all that, and I request the crowd to bear that. So there are totally 5 heads of income. If you are getting a salary, then that is taxed under the head salary, what we are going to see today. If you are doing a business or profession, then the income, whatever you earn from that business or profession, is taxed under the head profits and gains from business or profession. If you get an income from selling a property, that is taxed under the head capital gains. If you get rental income, that is taxed under the head income from house property, and any other source, whatever it may be, which will not fall in any of these 4 heads what we told just before, it will be taxed under the head income from other sources. These are the broad 5 heads of income. So in this broad 5 set of income, we are going to see income tax on salaries, right? Now, just because the nomenclature is salary, can we include something as a part of salary? Because I tell you why the segregation has actually happened. There is a segregation: salary, business income, capital gains, other sources, because each head has got separate set of rules. Each set has got separate set of calculation methods. So if you try to work out a particular income under a particular head instead of that appropriate head, then the calculations you will miss out. You will entirely apply a different set of law, which may result beneficial to you or maybe to the government, which is actually not correct, which is wrong. So the computation of income tax starts with segregation of income with a particular head. How to segregate an income in a particular head? Many of you may be working in a company and the company may pay you salary, and you can straight away decide, you can straight away assume that that is a salary, that is a salary income, and you are supposed to pay the tax under the head salaries. But there could be a lot of complicated cases as well. Probably a person may be working in a couple of companies and he may be getting salaries from both the companies, and he may not be required to attend the office regularly. In this modern world, we ourselves are conducting the meeting in Zoom. So many of the employees may not be required to come to the office. Some of the people may be working from 2 companies. How to decide particularly that this is a salary as per the law? Simple. Let me just share it. presentation. Okay, simple. Whenever there is an employer-employee relationship, that is taxed under the head salary. Simple. If you want to tax a particular income under the head salary, the first test what you need to do is whether there exists employer-employee relationship. Probably you may be hiring a contractor to build a house. You may tell him that this is your salary. Boss, your salary is 2 lakhs. You have to build a house for me. That's it. This cannot be considered as an employer-employee relationship. Your contractor, he is doing a business, and that income will be taxed under the head profits and gains from business or profession, not under the head salaries. So like this, what you have to do is you have to apply the test of employer-employee relationship. Unless and until there exists employer-employee relationship, it is absolutely impossible for you to tax a particular income under the head salary. So if at all, say your friend is coming to you and asking you to file your return of income, the first question you have to ask is, what is your salary? And he'll be telling you his salary is 50,000 per month. And the next question what you need to ask is, you need to understand the circumstances to decide that there exists employer-employee relationship. If you satisfy yourself that there exists employer-employee relationship, you can tax it under the head salary. You can do the workings under the head salary. If you are really not satisfied about the existence of the employer-employee relationship, then there is no need for you to bring it under the head salary. You need to find out some other head salary. So the first point is you need to test the employer-employee relationship. Say there is a professor. There is a professor working in a college. He is working in a college. He is an employee. He is requested to attend the college by 8 in the morning. He can leave the college. He can leave the college. He can leave the college by 3 in the evening. He has to attend the college full day. There is a term of employment. There is a term of employment, like many things are there. I think a person has asked a doubt. Please. Chandu Angel has asked a doubt. Can you please unmute and shoot out your query? Okay, right. We'll continue. So, unless and until the employer-employee relationship test is conducted, you cannot tax a particular income under the head salary. So that professor, yes, by analyzing the circumstances, there exists an employer-employee relationship between the professor and the college. So there is an employer-employee relationship. So the income, whatever he gets, is taxed under the head salary. Even though that is addressed as salary, for the purpose of income tax, you are forced to conduct this test. And yes, there exists employer-employee relationship between the professor and the college. So that income needs to be taxed under the head salary. Beautiful. Now, next. Full-time, part-time, sir, there is a person who is working on part-time employment. He is a part-time professor. He comes to the college by 10 o'clock in the morning and he leaves by 2 o'clock. He is a part-time professor. Nothing. Nomenclature doesn't have anything to do with income tax. He could be a full-time, he could be a part-time. The only test what you have to conduct is the employer-employee relationship, whether it is existing or not. And probably you may question, sir, how to find out the employer-employee relationship? It is purely personal judgment. The Income Tax Act has nowhere stated that if these conditions persist, if these circumstances exist, there could be employer-employee relationship like this. The Income Tax Act has nowhere mentioned this. So it is purely judgment. You, at your personal judgment, have to test whether there exists employer-employee relationship. If yes, salary. If not, some other head. Good. Now, full-time, part-time. As I told you, it could be full-time or part-time or occasional or whatever. You call them as a freelancer. You call them as advisor. Whatever it may be, if there exists employer-employee relationship, that particular income has to be taxed under the head salary. That's it. Now, salary waived off. This is again a beautiful scenario. Salary waived off. Okay, let us again assume a scenario. You are working in a college as a professor. You earn a salary of 1 lakh per month. And what you do, now the COVID crisis is happening. And what you are asking your employer, sir, this COVID crisis is happening. this COVID crisis is happening, so I am interested to donate my 1 month salary to COVID fund. I repeat, you are a professor working in a college and you are getting a salary of 1 lakh per month. Now this COVID crisis is happening and you are interested to donate 1 month salary to the COVID fund. So what you do, you instruct your employer to donate your 1 month salary to the COVID fund directly. You are not receiving. You are not at all receiving the salary. You are just instructing your employer to directly donate your salary to the COVID fund. Now tell me whether you have to pay tax or not. Please unmute yourself and tell me, or probably you can type in the chat box.
Yes.
Yes.
Good. We have got mixed answers. Somebody telling yes and somebody telling no. The correct answer is yes. We have to pay tax. Even though you haven't received the salary, but still you have to pay tax. The reason for that, I tell you in the next point. The reason for that, I tell you in the next point. But yes, you have to pay salary. Good, good. You have to pay tax. You have to pay tax. Right. Now, surrender of salary. Say what happens, there is an act called Surrender of Salary, Voluntary Surrender of Salary Act to the central government. If you are surrendering your salary under the act, Voluntary Surrender of Salary Act to the central government, yes, then there is no need for you to pay tax. I repeat, if you are surrendering your salary as per the provisions of Voluntary Surrender of Salary Act to the central government, there is no need to pay tax. Else, in all the circumstances, you have to pay tax. In all the circumstances, you receive, you don't receive, nothing, doesn't matter, you have to pay tax. Now, let's move on to the next point. Sir, what is the trigger point? You told me that, yes, we have to pay the tax on salaries. Good. I understood the point, what exactly the salary is. Just because a person is addressing an income as salary, that cannot be taxed under the salary unless and until there exists employer-employee relationship, that cannot be taxed under the salary. That is perfectly clear, sir. But now tell me, what is this chargeability? When this trigger point arises, I tell you, due or receipt, whichever is earlier. Due or receipt, whichever is earlier. Let us assume a complex scenario. Let us assume a hypothetical scenario. March 2020 salary. March 2020 salary you guys haven't received. The professor who's working in that college, because of the bad financial position of that college, the college has kept the salary payment for the month of March 2020 on hold. It hasn't denied the payment. It has kept it on hold. Say, in our example, we saw that the professor is getting a salary of 1 lakh per month. So the annual salary of that professor is 12 lakhs. But unfortunately, what happened? 1 month. For the financial year 2019-20, March 2020, 1 month salary has been kept on hold because of the bad financial position of the college. Now, tell me, what is the total income of that professor for the financial year 2019-20?
12 lakhs.
12 lakhs only.
12 lakhs. Let's see the chat box also. People, please use the chat box as well.
12 lakhs only.
12 lakhs. Good, good. Good. Somebody told 11 lakhs. A few of the people I got it in chat box, but it is actually 12 lakhs because the point is it is due or receipt, whichever is earlier. I tell you what exactly this due. The topic due is the moment you receive, the moment you get the eligibility to receive the salary, the moment it is confirmed that you are going to pay the salary, you are going to get the salary, your tax is also confirmed. No matter you receive, you don't receive, it is kept on hold, it has been paid to somebody else, it has been paid as cash, nothing, doesn't matter. The moment you are confirmed to receive a salary, the moment your salary is confirmed, that is due, and your tax is also due. You have to pay the tax. So there is no matter you have to receive or you have to get it by cash, you have to get it by check, no matter, doesn't matter at all. The moment the salary receipt is confirmed, yes, you are going to pay this, you are going to get the salary, the tax is confirmed. Or probably sometimes what happens, the March month salary, because, or April month salary, April 2020 salary, you have received in the month of March itself. April 2020 salary, you have received in the month of March itself. because due to your personal circumstances, due to your financial crisis, you have requested the management to pay salary in advance. So April 2020 salary you have received in March 2020 itself, 1 lakh rupees. Now tell me the total income of that professor for the financial year 2019-20 in our very old example. I repeat, the professor is getting a salary of 1 lakh per month. April 2020, since that professor is in crisis, during the month of March 2020, he has requested the management to pay the salary of April 2020 in advance. He is getting a salary of 1 month in advance. So during the financial year 2019-20, he has got 13 months salary. During the financial year 2019-20, he has got 13 months salary. Now tell me that salary, tell me the total income, what he has to pay, what is his total income for the financial year 2019-20?
12 lakhs only.
Only 12 lakhs. So it's 12 lakhs only.
12 lakhs only. Somebody else?
12 lakhs only.
12 lakhs only. Good. It is 13 lakhs. That is what mentioned here. That is what it has been highlighted here. Due or receipt, whichever is earlier. If you receive the salary in advance, then you have to pay the tax also in advance. That is the beauty of the taxation, because the government is not ready to wait for you to pay the tax in the next financial year. Say, if you are going to pay the tax in the next financial year 2020-21, then the tax for that April month salary will be recovered by the government only in the next financial year. Even though you have received your salary 1 month in advance, you'll be paying the tax 1 year later. So the point is, if you are getting the salary earlier, you have to pay tax earlier. If you get salary or not, if you get the eligibility to get the salary, you have to pay tax. Got it? Clear? Due or receipt, whichever is earlier. Due, the eligibility to get the salary, yes, you need to pay tax. You are not eligible to get the salary, but still you are getting an advance of salary, yes, you have to pay tax. Got it? Clear? Clear? Got it?
Yes, sir. Yes, sir.
Good. So due means your eligibility to get the salary. Receipt means the actual realization of salary. So whichever is happening earlier, you have to pay tax. You have to include that income during the particular financial year. During the particular financial year, you have to include that income. Good. Now, there is always a confusion here. Salary advance and advance against salary. Okay. Let us stick to our example. The professor is earning a salary of 1 lakh per month. April 2019 to March 2020, the financial year is happening. What happened? There is a slight change. During the month of March 2020, the professor requested the management an advance of 1 lakh. An advance of 1 lakh on a condition that 1 lakh will be deducted. That 1 lakh will be deducted at a rate of 10,000 per month across 10 months. I repeat, in our example, the professor requested the management to pay an advance of 1 lakh, which will be deducted in 10 equal installments, 10,000, 10,000, 10,000 monthly for 10 months. Now tell me whether for this advance of 1 lakh for the financial year 2019-20, for the purpose of taxation, the salary of the professor is 12 lakhs or 13 lakhs?
12 lakhs.
12 lakhs. Anybody? Anybody else? Good. Anybody else? 12 lakhs. Good. Because that is not a salary. That is an advance. That is a loan. As I told you in the initial point itself, as I told you in the starting point itself, only income is taxed. Not loan, not advance, nothing. Only income is taxed. So this 1 lakh is not the income. It is a kind of loan. It is a kind of loan received by the professor, which will be adjusted in equal installments across 10 months. So this is not a salary. This is a loan. So no tax. So let me summarize this due or receipt concept. The first one is due. The moment your eligibility to receive the salary is confirmed, you have to pay the tax. No matter you get the salary, you forego the salary, nothing, don't matter, doesn't matter. The moment your eligibility to receive the salary is confirmed, you have to pay the tax. Next, receipt. Okay. Even though the eligibility to receive the salary has not come, you have received the salary in advance. Yes. Due or receipt, whichever is earlier. If you have received the salary in advance, that will be included as a part of the total income of the particular financial year. Now, advance against salary. which is nothing but loan, which will be deducted in equal installments in the future period. No tax. No tax, because that is not an advance of income, that is a loan. Clear? Let's move on to the next slide. Because these are the basics. Without knowing these basics, it's going to be impossible for you to file the income tax return, because the moment you open the income tax form, you will get to see all these terms, you will get to see all these words, and the moment you see all these words without knowing the meaning or without knowing the rationale and logic of these words, it's going to be impossible for you to file the returns. So the first half of the session, let's concentrate on the subject, let's concentrate on the topic, and probably the later half of the session, let's talk something about filing of income tax returns. Okay, clear? Let's move on to the next slide. Good. Now, taxation of salary, an overview. What is a salary? Right. Let's stick to our very old example. The professor is working in a college. The professor is working in a college, and the salary structure of the professor is 1 lakh per month. The salary structure of the professor is 1 lakh per month, which is structured in such a way that the professor will be getting as a monetary benefit 50,000 in account, 50,000 in account, 20,000, 50,000 in account, 20,000 some other allowance, some bonus or variable pay. 50,000 is the salary, 20,000 is the bonus or variable pay, 10,000 is not paid as cash, it is given as an accommodation to the professor. The accommodation has been given to the professor at a free of cost. For that, 10,000 is worked out, and the balance 20,000 it is given as annual bonus. It is given as annual bonus. I repeat, 50,000 is the salary what is credited in salary account of the professor. 20,000 is the variable pay. 10,000 is the accommodation fee, and another 10,000 or 20,000 is the that's what we told. Another 20,000 is the annual or bonus. Now tell me whether the professor has to pay tax on the entire 1 lakh, because the professor didn't get entire 1 lakh as money. Some of the benefits also received. Now tell me whether the professor has to get entire salary of 1 lakh, he has to pay tax. Good. Yes, people are telling yes. Yes, the professor has to pay tax on the entire salary of 1 lakh, no matter what it is. It could be a benefit, it could be a monetary benefit, it could be a non-monetary benefit, it could be a kind of coupon, or it could be a kind of a benefit, whatever it may be. If the professor is receiving a salary, he has to pay tax. It could be a monetary benefit or non-monetary benefit, whatever it may be, he has to pay the tax. He has to pay the tax on the entire salary. That is what the income tax is pretty clear. The salary, the definition of the salary is very vast. It could be wages or remuneration or fees or any other benefits or profits in lieu of salary or perquisite, whatever it is. You have to combine everything. You need to combine the salary credited in your account. You need to combine the monetary benefits. You need to combine the non-monetary benefits like rent-free accommodation, like a children's school fee, like any other facility provided by the employer, any benefit, whatever benefit you get from a company for your personal purpose, not for official purpose. If you get something for official purpose, that cannot be considered as salary. If you get something for your personal purpose, if you get any benefit from your company as a personal purpose, it is considered as salary. Now, taxability of allowances. Right. There are a lot of allowances. Many of the people here could be salaried class, and you could have come across your pay slips and you could have seen many allowances like dearness allowance, OTE, overtime allowance, like medical allowance, city compensatory allowance, HRA, dearness allowance, like many allowances you would have come across. See, all these allowances are permitted in the law. Now, the Income Tax Act states some of the allowances are fully taxable, and some of the allowances are partly taxable, and some of the allowances are fully exempted. So at the time of computing the salary, what you have to do, you have to work out the computation of total income of a salary on deduction method. I tell you what exactly this deduction method is. You need to combine everything. entire 12 lakhs, that forms top of your salary. That is your gross salary. Your gross salary is inclusive of all the benefits received by you from the company. It could be monetary, non-monetary, or a kind of coupon, whatever it is. Your gross salary is all the benefits received by you. And then you need to keep on kicking off. You need to keep on deducting the exemptions. You need to work out the deductions. You need to work out the calculations. Say if the gross salary is 12 lakhs, the net taxable salary is 6 lakhs. I tell you, the art of bringing the total gross salary of 12 lakhs to 6 lakhs is something awesome. Everybody cannot do. If somebody is earning a salary of 18 lakhs, by legally I'm telling, not illegal. Sir, what sir? We directly bring the salary as 18 to 6. What you are telling? I am telling you legally. By using all the legal provisions, by using all the deductions and exemptions available in Income Tax Act, the art of bringing the taxable salary to 6 lakhs from 80 lakhs is something only professionals can do. And you too, I believe, after finishing off our upcoming webinars, I think you too also will be able to do that. So, as I told you, some of the allowances are fully taxable, like DA, overtime, city compensatory allowance. Some of the allowances are partly taxable, subject to certain deductions. One of the familiar allowances is HRA, house rental allowance. Many of you, everybody would have this house rental allowance in your payslip, because there is certain calculation method to work out this house rental allowance, and by using that calculation you can claim the deduction of that house rental allowance. And fully exempted, there are certain allowances which are fully exempted. There is no need for you to pay tax on those allowances, and such allowances are, example, allowances paid to high court judges. So allowances paid to high court judges are completely exempted. So the point is, the reason behind introduction of all the allowances is just to facilitate you to work out the salary in such a way that you pay the tax minimum. The objective behind, probably many of you may be wondering, what is this? Why these people are giving me payslip, basic, HRA, DA, other allowance, city compensatory allowance, then dearness allowance, overtime allowance. Why? What is the reason behind all these allowances? Means these are the options given by the company to you to facilitate you to work out the deductions and exemptions, and to bring out the taxable salary from 12 lakhs to 6 lakhs and pay the tax at minimum. This is a kind of favor given to you by the company. Some of you may be having a salary of, if you look at the payslip, that payslip will have only one component, basic salary 1 lakh. Many of the companies are doing that. No way you have to pay the tax for entire 1 lakh, because no allowance, nothing. Basic salary 1 lakh, gross salary 1 lakh, number of days work 31. That's it. The payslip is closed. If you come across that kind of payslip, then you have to feel yourself so unlucky. No option. You have to pay tax on entire 1 lakh. There is no point in talking about allowances, deductions, nothing. Right? Okay. Next. Pension, gratuity, fees or commission or variable pay or incentives, whatever it is. Pension, yes, there is a separate set of calculation method to work out the pension as well. I believe that many of the pensioners are also part of this session. Yes, there is a method to work out computation of taxable pension as well. There are a lot of provisions in Income Tax Act to work out the pension in such a way that the tax on pension is kept on minimum. So it's like that. Gratuity, fees or commission, variable pay, leave salary, all these things, yes, there are set of conditions, there are set of calculation methods using which you can reduce the tax. All these measures are given to facilitate to the taxpayers to keep the tax at minimum. Our government is not sadist. They want tax, that's it. But it is not that they are taxing the people flat. They are giving all the options, and it is our responsibility, it is our duty to take note of all the exemptions, all the deductions, all the calculation methods to keep our tax at minimum. Right? Provident fund, profits in lieu of salary. Yes, again an interesting question. Let us assume that you are working in a company, you are working in an IT company, and you have been working for some 20 years, and because of the crisis and some other extraordinary circumstance, the company no longer wants your valuable service and the company wants you to quit the job. The company wants you to quit the job, but the company is generous enough to pay you some retirement compensation of 10 lakhs. The company is generous enough to pay you a retirement compensation of 10 lakhs. Tell me whether this 10 lakhs is taxable or not. Tell me whether this retirement compensation of 10 lakhs is taxable or not. Yes, yes, no, yes. Yes, it is taxable. There is no point in thinking even no, because that is a salary, that is an income. That is what I told you at the starting of the session itself. The moment something is considered as your income, you have to pay tax on that. And this retirement compensation is received by you by virtue of the employment. Just because you worked in that IT company for 20 years, the company is generous to pay you the retirement benefit. The company is generous to pay you the termination benefit. And this is also an income for you. So you have to pay tax. Like this, many components are there. All these things in detail we'll be looking at in the upcoming session on Wednesday. Now, as such, any doubts? If you don't have any doubts, you can feel free to type no in the chat box. So that
Sir, I have a doubt.
Yes, please.
You said that the various allowances are not taxable.
Yes.
But in all these cases, the salary slip contains all these allowances, and the entire amount is being taken into as taxable income.
Okay.
What makes the difference?
Yes, that's a beautiful question. What happens is nowadays, probably you may be talking about the old pay slips, but nowadays the information technology companies like TCS, Infosys are coming out with a beautiful salary system. They are giving the liberty to the employees to work out their salary. They are giving the liberty to their employees to work out the salary structure, and the employees taking the help of our professionals, and they are structuring the salary in such a way that they are including majority of the non-taxable allowances, and they are keeping the taxes at minimum. So what happens in those days, what you are telling, the companies used to include all the allowances. They can work out the breakup of the salary. They include all the allowances, but still they would include only taxable allowances. They will not include non-taxable allowances. But nowadays, the modern companies are giving the options to the employees to structure their salary on their own, so that the employees are taking the help of the professionals and working out the salary in such a way that the tax is minimum. Say, for example, as you told, the companies are including lot of allowances. If they are including a certain allowance, like say fully exempt allowance, like yes, probably like if there is a travel allowance. Okay, the travel allowance, again, there is a technicality in that. Probably a uniform allowance, probably travel allowance. These allowances are exempt up to a particular limit. So these allowances we can include as part of salary. I tell you a rough, clear example. There is a section called Section 10, subsection 14, special allowances, and that special allowances have got a lot of allowances. Which are actually exempted. There are a lot of allowances which are actually exempted. As I told you, there is a tour allowance. The tour allowance, if you include, the rationale behind tour allowances, it is an allowance given to the employee to meet the expenses incurred on tour. Many of the companies, they don't mind. If you include as tour allowance, they'll pay. Many of the companies don't mind, and tour allowance is completely exempted. So this comfortable salary structure, good salary structure, could be worked out at the liberty of the employees, if at all the benefit is given to the employee, if at all the liberty is given to the employees. Clear? Got it, sir?
My question is, so I work for a financial sector, so I don't have the liberty to choose my, fix my salary structures.
Okay.
So it is obviously given by the organization.
Okay.
And I'm helpless. So entire thing is being listed into as taxable income, and I'm paying.
Okay. Then probably you can talk to your company and you can at least ask some portion of allowances to give the liberty to you to structure it on your own. Probably you may ask. If you have got an HR portal, and if your payslip or something is worked on that, then probably you may raise a query on that, and the companies are permitting.
Thank you, sir. Let me try.
Sure. Perfect. Good. So, got it? Any other doubts as such? So, can we move on? Can we move on? Please type in the chat box. It will be really helpful for me to move ahead. Good, good. So the next one is, let's move on to the right. Next, perquisites. The perquisites may be cash or kind. I tell you what exactly the perquisite is. Let me check out the chat box. Many people. Yes, good responses we are getting. Okay, right. Perquisite. The perquisite may be a benefit. It is a kind of benefit given to the employees. It is a benefit given to the employee. It may be cash or it may be in kind. Kind means it may be a non-monetary benefit, but still it is a perquisite. It is a salary. You have to pay tax, right? As I told you, let us refine our old example. Our professor working in salary, getting a salary of 1,50,000 by cash. Now tell me, 20,000 for rent-free accommodation. Since the accommodation is given, 20,000 is deducted, and 10,000 is given. 10,000 is given as a benefit for furnitures. There are certain furnitures in the quarters, and for that 10,000 is given, and another 20,000, as I told you, annual bonus. Now here the complexity arises. Say an employee may be having a quite exquisite luxury furnitures. An employee may be having a very beautiful bungalow, and still the company may treat it as only worth for 10,000, and the company may still treat it as only worth for 10,000. There is a disturbance. Okay, fine. Let me come up with a new example. There is an employee working for a company. This is a new example. There is an employee working for a company. He is getting a salary of 1 lakh per month. And in addition to that, he has got quarters in Poise Garden. He has got quarters in Chennai Poise Garden next to Rajnikant's house. And the value of that accommodation valued by the company is 10,000. And the total salary of that employee is 1,10,000. I repeat, a person is an employee in a company. He is getting a salary of 1 lakh per month. And in addition to the salary, he is given an accommodation in Poise Garden next to Rajnikant's house. And for that, company is treating that accommodation worth for 10,000 per month. So the total salary of that employee is 1,10,000 per month. 1,10,000 per month. Can you tell me whether the government will accept? Whether it is okay? No. Good. Yes, the government will not accept. So for valuing this kind of perquisite, there is a separate set of rules. For valuing these kind of perquisites, these kind of benefits. Just because the company is entering the value as 10,000, the value of the accommodation given to an employee next to Rajnikant's house, it cannot be taken as it is 10,000, and the tax cannot be worked out in that way. There is a separate set of rules. There are separate set of rules to value these perquisites. Yes. So similarly, say let's refine our example. That person 1 lakh per month salary plus 10,000 worth accommodation next to Rajnikant's house, and in addition to that, say that person is having a homemaid, is having a servant, and the salary of that servant is 10,000. The salary of that servant is 10,000, and that is paid by the company. He is asking his employer to pay, sir, please pay 10,000 salary of my maid and make my salary as 1,20,000. I repeat, 1 lakh is his salary plus 10,000 is the worth of the accommodation given in Poise Garden, and 10,000 he is asking his company to pay the salary directly to his maid's account as he is doing certain service to this employee's house. Now tell me the total salary of that employee. tell me the total salary of that employee. 1 lakh salary plus 10,000 Poise Garden plus 10,000 maid salary.
120.
120. So is it okay if you guys are telling? So is it okay? You guys are telling that it is fine if that guy is paying tax for 1.2 lakhs, right? Am I right? If that guy is paying a tax for 1.2 lakhs, that is perfectly fine. Am I right?
Yes, sir.
Okay. If that is the case, many of our guys may take all the benefits, all the advantages. Many of the top management people may take all the benefits and advantages from the company, and still they may report their salary as 1.2 lakhs. No, that is not possible. The government has come up with certain set of regulations to value the accommodation given in that Poise Garden accommodation. Say in that circumstance, what we have to do, his gross salary will be taken as 1.2 lakhs. In that accommodation in Poise Garden, 10,000 will be taken out. Because that is not correct. The company is not fair in valuing that accommodation for 10,000 rupees. That is not correct. So 10,000 worth accommodation in Poise Garden is taken out. Calculation is done as per the law, as per the measures set out in Income Tax Act. Calculation is done. Say, as per the calculation, the value of that accommodation is 40,000. You need to add 40,000. Though the net salary of that employee will be 1 lakh plus 10,000 plus 40,000 is equal to 1,50,000 will be his taxable salary. Got it?
Yes, sir.
Got it clear? Yes, the Form 16 doubts and all we are getting. The Form 16 doubts probably we'll be clarifying in the later half of the session. Probably the Form 16 doubts we'll be getting the later half of the session. I repeat for the benefit of the people, the employee, the company is working, the employee is working in a company and getting a salary of 1 lakh per month plus 10,000 accommodation, 10,000 worth accommodation in Poise Garden and 10,000 salary to the maid directly paid by the employer to the maid. So the total benefits received by the employee from the employer is 1.2 lakhs. Now here the government noticed there is some justification left out. It is not possible for anybody to have an accommodation worth 10,000 per month in Poise Garden. So as per the law, what we have to do, we have to work out the total salary, 1.2 lakhs. In that 10,000 Poise Garden non-justifiable portion of salary is taken out and it is revised. The calculation is worked and the real worth of Poise Garden accommodation is 40,000 and that is brought in. So 1 lakh salary plus 10,000 maid salary plus 40,000 actual Poise Garden accommodation value as suggested by the government. So the total salary is 1.5 lakhs and that person has to pay the tax for 1.5 lakhs. Got it? Clear? Because people wanted me to repeat and that's why I repeated. Please bear. For the benefit of the larger crowd, please bear. Right? Got it? So like this, the government has got lot of rules and lot of regulations and lot of valuation rules to make sure that the tax is not leaking out anywhere. Because the government is pretty sure the government is not a sadist yet. The government is not a looter. The government doesn't want even a single penny beyond the tax what you are liable to pay. Similarly, the government doesn't want to collect even 1 rupee short of what you have to pay. The government is pretty clear. The government has to collect the normal justifiable tax as per the law. The government has to collect. That's it. The government has to collect the justifiable tax. Right. Now there are certain set of perquisites. Which are completely exempted. Yes. Say a person is working in a company. And as a result of the employment in that company, the company may provide him a telephone at his residence. Nowadays the mobile phones have come. Okay, mobile phone at his residence. Now, this is a kind of benefit received from that employee. This is a kind of benefit received by that employee from the employer. So, as per our logic, as per our rationale, this also needs to be taxed. But since it is included as a part of exempted perquisites, since this is included as a part of non-taxable perquisites, there is no need for you to pay tax. So remember, if your company is installing a telephone in your house, yes, you can right royally take that telephone and you can use, because this is not a taxable perquisite. There is no need for you to pay tax. There is no need for you to pay tax. Similarly, in those internship days, in those training days, some 10, 12 years back, some 12 years back, yeah, 12, 13 years back, we used to visit the companies. And the company people used to offer us tea, coffee. Many of the companies are offering employees tea, coffee, and all of the refreshments. Now you have to think in this angle. See, I'm getting tea, office tea. Whether this is a kind of income for me, whether I have to pay tax on this, even this also. You may think in that way. You will have to think in that way. No, it is not taxable. It is a non-taxable perquisite. Probably out of the logic, probably out of the common man thinking, as of today, you might have been thinking that there is no need for you to pay tax on the tea or coffee supplied by the office to you. I repeat, probably out of the common man thinking, you guys may be thinking that there is no need for you to pay tax on tea, coffee, or other refreshments received by you from the office. But the real reason is it is a non-taxable perquisite. So tomorrow when you go to office and when somebody is offering you tea, coffee, you can right royally take it, stating that it is a refreshment. It is not taxable. It is a non-taxable perquisite. Next, subsidized lunch. You can see many manufacturing companies offering subsidized lunch to the employees. Subsidized lunch. Every day the afternoon meal is provided to the employees at a free of cost or at a subsidized rate of 10 rupee per meal. This is a kind of benefit, right? This is a kind of benefit, because nowadays with the kind of inflation what we have, if you have to take a full meal somewhere outside, you have to pay 80 rupees or you have to pay 100 rupees to get a decent, good vegetarian meal. But the companies are offering you at a subsidized price of 10 rupees per meal. So this is also a kind of benefit what you receive from the company. So can we pay tax on that? You got my point? Many of the manufacturing companies are offering the lunch at a subsidized rate. Full meals, full vegetarian meals at 100 rupees. I'm sorry, at 10 rupees. The equivalent meal, if you have to take somewhere in an outside decent restaurant, you have to pay 100 rupees. So 100 rupees worth meal is given to you by the company at a cost of 10 rupees. This is a kind of subsidized lunch. No. Yes. There is no need for you to pay tax, provided the benefit received by you from the company in the form of subsidized lunch is 50 rupees per day. If you are getting the benefit from the company in the form of subsidized lunch from the company, 50 rupees per day, no tax. Beyond 50, yes, you have to pay. Beyond 50, you have to pay. Somebody has raised her hand. You can unmute and ask.
Is that 50 on the total amount on the subsidized amount?
Up to rupees 50 per day, up to 50, the benefit what you get. The benefit what you get, because 10 rupees you have already paid. If you are getting a benefit of 40 rupees, no tax. If you are getting a benefit of 50 rupees, no tax. If you are getting a benefit of 60, then you have to pay tax. Got it? So similarly, there are a lot of provisions, and all these provisions will be seen. Right. Now, there are a set of employees called specified employees. Like the top people, director of a company, or a person who's having shares of 20% or more in the company. A person who's working in the company and still having a share of 20% or more in that company. So for those people, all the fringe benefits are also taxed. Say if a company is providing the sweeper, yes, the employee has to pay tax on that. If the company is providing a gardener, yes, the employee has to pay tax. Sir, already you told us that employee salary, sweeper salary, servant maid salary, if it is paid by the company, we have to pay tax. Then why again specified employee? Please remember, in the previous instance, you requested the company to pay the salary directly to your employee. It is not that the servant maid was offered by the company. You requested your company to pay 10,000 salary. In our previous example, remember that boys got an example. You requested the company to pay 10,000 salary to the maid. So you had to pay tax. If you are a specified employee and if an employee is given to you, like a servant is given to you, then that benefit was also included as a part of salary and you have to pay tax. That benefit is also included as a part of salary and you have to pay tax. Say some of the companies may be offering car for the personal purpose also, to the employees. Since the car is offered by the company to the employee for the personal purpose, yes, you have to pay tax. So let me summarize. Salary received by me as cash, salary received by me in the form of benefits, salary received by me in the form of coupons, salary received by me in the form of accommodation, salary received by me in the form of sweepers, salary received by me in the form of any other benefits. All these things put together is my salary. It is not that something what is actually hitting my account. What is hitting my account? So the entire salary is taxable. The subsidized lunch, a person, Mr. Saktivel, has asked about. So probably after the session, we discuss something detailed about the subsidized lunch, because that is an intricate provision and we need to discuss in detail. Probably after this session, we assist you in understanding that provision. So put together all the benefits, whatever you get from a company. It could be monetary, non-monetary, conveyance benefits, like as I told you, travel benefits. So all these things are taxed. Clear? Great. Now let's move on to the next slide. Okay. Major deductions. If you want me to tell you major deductions for a salaried class, only 3 deductions. Major deduction. Standard deduction 50,000. If your salary is 12 lakhs, you can straight away deduct 50,000. There is no need for you to provide any bills. There is no need for you to provide any supporting nothing. Standard deduction 50,000. Entertainment allowance, yes, subject to certain conditions, entertainment allowance is considered as deduction. Professional tax. I tell you what exactly this professional tax is, because many of the people are getting confused what exactly this professional tax is. This professional tax is a nominal amount deducted by the company in your salary every month, and it is paid to the local corporation. If you are working in a company in Chennai, probably your company may deduct an amount of somewhere around 125 rupees per month. They may deduct from your salary, and that professional tax is nothing but the tax remitted to the Chennai corporation, nowhere else. No income tax, nothing. Because I've seen many people confusing this professional tax with income tax or some other tax. Sir, what is this, sir? Why are they deducting 50 rupees? Why are they deducting 100 rupees in my salary? Yes, that is a professional tax, and there is a separate slab for professional tax, and based on the slab, the maximum half yearly professional tax is 1,250 per month. 1,250 per month. Okay. Somebody asked me what are all the perquisites exempt in all cases of employees. Yes, telephone is exempt, the refreshments is exempt, and in case any cab facility is provided for picking you up from your home to office and dropping you from office to home, that is also exempt. Like this, that exempt list is also a very exhaustive list. Probably that exhaustive list we'll cover in the upcoming session. Just for the understanding, just for an idea, we have listed here some 3 to 4 allowances, 3 to 4 perquisites which are completely exempted. Yes, this is the case. Yes, entertainment allowance is only for government employees. That is what I told you, subject to certain conditions. Good. So I think now you guys are clear. Professional tax is something, the tax remitted by your employer to the local corporation. The maximum professional tax what an employer would deduct for a 6 months period is 1,250. 1,250 is something, the professional tax what they deduct for 6 months period from your salary, and they remit to the local Chennai corporation. Local Chennai corporation. Right? Got it? So that is also eligible for the deduction. You can claim that deduction. Okay. How is city compensatory allowance is different from professional tax? Yes, city compensatory allowance is nothing but an allowance given by the company to the employees to maintain yourself with the standard of living of the city. City compensatory allowance, say probably you may be coming somewhere from Madurai or somewhere from Tirunelveli to work in Bombay. The cost of living, what is prevailing in Madurai could not be equated with the cost of living prevailing in Mumbai. So for that, you need to adjust yourself. You need to adjust yourself to the standard of living, to the cost of living of Mumbai city, and to promote that, to make yourself adjustable for that, the company is offering the city compensatory allowance, and that is nothing but the part of your salary, and it doesn't have anything to do with professional tax. Professional tax is the tax deducted by your employer and remitted directly to the local corporation. Got it? Clear? So the computation of total income is include everything, include all the monetary, non-monetary, everything put together, work out total income, and then knock off all the deductions, knock off all the exemption, and then work out your salary. That will be the net salary. That will be the taxable salary. That will be the taxable salary. Right. Next, TDS. Many of you are familiar with this TDS concept. Tax deducted at source. Many of you are familiar with this concept. Tax deducted at source. See, for salaried class, I tell you very clearly, the salaried class people are the honest people who are remitting the tax to the government. One of the biggest sources of revenue for the government from the income taxes, tax from salary people. Yes, because the salary people are honest people, they have to pay tax, no other way, you cannot do anything. And the TDS is tax deducted at source. See what happens, the government wants the money instantly. The government wants the money instantly. Even though you are paying tax at the end of the financial year, the government is not ready to wait for you to close the financial year and pay the tax after the end of the financial year, because the government needs money. So for that, TDS concept has been introduced. So the concept of TDS is tax deducted at source. So what happens, your employer, that is why the responsibility is given to the employer, because if the responsibility is given to the employees, the government is pretty sure that you people will not pay, you people will pay only at the end of the year. So the responsibility is given to the employer. The employer has to deduct tax, and remit to the government. Now tell me, how will the employer work out this TDS? 12 lakhs salary. Let us assume that monthly salary 1 lakh, total annual salary 12 lakhs. Now what happens? You have got lot of deductions, lot of exemptions in income tax. Probably, as I told you, the HRA, house rental allowance, if you provide the rental receipt, you can claim the deduction. Probably, if you provide your investment proofs, probably you can claim the deduction. So what happens? The companies, what they do, they fix a cutoff date. Say the cutoff date is December. And if the financial year is starting in the month of April, in the month of May, they will ask the employees to predict the investments. I repeat, to predict the investments. It is not that they are asking you to provide the confirmed declaration. They'll call, Mr. A, please come here. Your salary is 12 lakhs per annum. What are all the tax saving plans you have got? Please write it here. So all the tax saving plans are taken into consideration, and the taxable salary is worked out by the company. And based on that, the tax is worked. And that tax is split across 12 months, or say 6 months, up to December. Based on your declaration, based on your tax planning, the tax is worked out as, say, 60,000 or 90,000. So for 9 months, April to December, 9 months, 10,000 each, the tax is deducted in your salary. And December month, the company asks you proof. Boss, Mr. A, you told in the month of April that you are going to invest 1 lakh rupees. Show me the proof. And you will start blinking because you would have invested only 50,000. Mr. A would start blinking. So, in the month of December, the company, based on the actual submission of proofs, it reworks the salary. It reworks the taxable salary. It reworks the taxable salary, and the differential tax is deducted in the month of January, February, March. As far as the government is concerned, the government wants the tax to be realized before the end of the financial year. That's it. As far as the government is concerned, the government wants the tax to be realized before the end of the financial year. That's it. So what happens in the month of April? The company will call you and ask you about the prediction, your tax planning options. And based on that, it will work out the tax, and the tax is coming around 90,000, and it will deduct across 9 months or across 12 months, whatever, based on the company policy. And in the December month, the company will again ask you to provide the proofs, and you may not provide the proofs. And once you don't provide the proof, the company will not consider that deduction, and they'll rework your taxable salary, they'll rework the tax, and the differential portion they will deduct in the subsequent months of Jan, Feb, March. Clear? This is a summary of TDS in salary.
Sir, I have one doubt. Shall I?
Yes, sir. Yes, sir.
Okay. Thing is, if I am declaring my investment in April,
Okay, sir. Okay, sir.
that's fine. And if I missed out to declare my investment in the portal in April month, and I got income tax deduction of around 10,000 for April month, and what happens in May month? I declared like this much of amount I'm going to invest like that. So what happens to this deducted income tax amount in April? When will I get this?
This is a beautiful question. Some of the small companies are generous enough to accept the declaration what you make in the month of May, and they will again rework your tax in the month of May itself, and they will deduct appropriate tax in the upcoming months. Some of the large corporates, they cannot work out for all the employees in bits and pieces. So what they will tell you, sir, okay, this is the due date, you have missed the due date, fine. At the time of providing the proofs, submitting the proofs in the month of December, you please provide and see if possible, and we will see if possible, we will rework the tax, and we will see if something could be done. If not, then at the end of the financial year, after the end of the financial year, you have to work out the tax, and you need to get the refund from the income tax department. So I repeat, if it is a small company, the companies are generous enough to accept your declaration in the month of May, and they are providing you the benefit. Some of the large companies, they are not providing. Sir, let us see in the month of December. They'll say, and if possible, they'll give you the relief. If not possible, they will ask you to file the income tax returns at the end of the financial year. After the end of the financial year, and they will ask you to get the refund directly from income tax department.
So, after the end of the financial year means 2021, after March only, I have to file the ITIR, right?
Yes, sir.
Exactly. It might be June or July something.
Exactly, sir. Exactly.
So I'll get this April 20 amount in 2021 July or August, something like that.
Exactly, sir. You're perfectly correct.
Okay. Thanks.
No other go.
Sir, I have got a question.
Yes, sir. Please.
So if government is collecting the tax at every appropriate interval, that is while paying the salary, and that is being deducted by the employer.
Yes, sir.
But when the tax has to be returned back, we need to wait for one financial year.
Yes, sir. No other go.
Okay.
You have to wait. No other go.
I just have one question.
Yes, ma'am.
Yeah, so here I think I already put it in the chat box. That is, it's related to this Form 16. See, I just wanted to know if someone worked for consequently for 5 to 6 years, and when an employee takes a break in the career. So in that case, even for the 6th or 7th year or the the other years, of course that the employee has a plan to resume their career. But in the middle career break period, so should we submit any forms to the government? So that is my question.
Yes, you have to submit, ma'am. It is for your own benefit, actually. If at all you want me to tell you strictly in the eyes of law, no, there is no need for you to submit, because you have to submit your income tax returns only if you have taxable income. I mean, if your income is over and above 2,50,000 per annum, then you have to file your income tax returns. If you don't have income over and above 2,50,000 per annum, there is no need for you to file. But still, I personally recommend you to file. I personally advise you to file in those circumstances. At least you need to file nil returns, because then only the continuity is maintained. The record is clear, and you are avoiding the chance of getting notice from income tax department, because the tax authorities, what they see, this lady worked for 6 years and she has drawn an amount of 12 lakhs per annum continuously. And what happens, suddenly 1 month she hasn't filed any return, and again the next year she has filed. So 1 year she has missed out. Come on, send the notice. That is how they will think. So it's for your own safety to file the nil returns. But if at all you want me to tell you strictly in the eyes of law, there is no need for you to file.
Okay, so if that is the case, what is the form that is supposed to?
ITR1, income tax returns 1.
Okay, all right. Yeah.
Sorry for disturbing you. I have one question.
Please, welcome, sir. Please.
Yeah, I am Dr. Subramanian from Bangalore. I work for a company called iNurture. So
Please.
my question is it possible to avail the housing loan benefit in the income tax return as well as HRA? Because I'll tell you my classical case. I live in Bangalore. I pay rent for the apartment where I am living. Typically, I have my residence in Tamil Nadu where I have got a home loan and I'm paying EMI. So is it possible to get EMI benefit in the tax as well as the HRA?
You can, sir. You can. We have got for the people perfectly, because the rationale is there is no compulsion on the Income Tax Act. Nowhere it states that you have to live in the house in which you have bought. It is my own wish. I can live wherever I want. Probably I would have bought a house in Chennai and my parents might be living there, and just because of the work I may be living in Bangalore, and I would have lived in a rented house and I would have paid rent. So these kind of cases are not avoidable. These kind of cases are clear. Already a lot of case laws have come. So yes, the housing loan, what you got for procuring a property in Chennai, and if your parents are living in that property, you can claim the ATC benefit, and the HRA, what you receive for paying the rent of the rented house you are living in Bangalore, you can claim for that also. So yes, you can claim both HRA and ATC.
Thank you.
Sorry, added to that, I want to say something. For example, the properties he is receiving some rent amount. He has to show in the income, right?
I'm sorry, sir. Mister, please come again.
If the property is Chennai,
okay,
is rented out. He has to show the income also, right?
Yes, sir. He has to show.
Yes.
That rental income will be taxed under the head income from house property. Yes. But he has to show. Yes, all the income we have to show, sir. No other go.
Yes. Through the declaration of Form 12C, I suppose.
No, not 12C. If at all, you have to intimate to the employer. And if you ask your employer to consider that income also, then Form 12C. If you don't want to intimate to your employer and you need to straight away inform to the income tax department, it is not a compulsion for you to inform in 12C. You can straight away inform in your income tax returns.
That's true, but if we need to avail the income tax benefit on the interest portion on the housing loan, so definitely we need to inform our employer. So that C is mandatory, right?
Not like that. If at all you want to avoid the tax in the initial stage itself, yes, you have to inform your employer through Form 12C, and you need to get the benefits instantly. If you feel that it will be very difficult for you to convince your HR and all other company people, then there is no need for you to inform to the company. Straight away inform in the income tax returns and get the refund. So 2 options. 1, straight away instantly reduce the tax liability by informing in 12C. Option 2, no. Inform it, pay the tax, inform to the income tax department later and get the refund.
Okay. Thank you.
Yes, sir. Got it? Clear? Any other doubts? Right. Now let's move on to the interesting part. We'll not take much time. Probably in another 15 minutes we try to wind up the session. Interesting part. Form 16. What is this Form 16? Many of you may be working and receiving the Form 16. Form 16 is nothing but the tax certificate given by the company to you. There are two parts, Part A, Part B. Many of you get the confusion. In those days, I think a couple of years back, Part A was generated from the income tax portal and Part B was generated by the employer from his own system. There was no involvement of the government. But for the past 2 years, Part A, Part B, both are generated in the income tax portal itself. It is an online generated document. It is an online generated document which contains the entire list of calculation. What is your gross salary? What is the allowance? What is your net salary? Like all the calculation, everything will be there in Part A and Part B. Part A is nothing but the receipt. Part A is nothing but the receipt confirming the tax payment by the employer to the government in your account. The Part A is nothing but the receipt of the tax payment by the employer to the government in your account. Part B is nothing but the salary structure. What happened, I tell you the interesting part. Why this Part B also have been generated from the system. Because in the initial part of our discussion, we discussed a lot about the allowances. And many of you asked me, why the employers are so rigid to include all the taxable allowances? Why are they not including the non-taxable allowances? Like many people asked. So what happened in those days, our smart people, salary class, they restructured their salary in such a way that they themselves included a lot of non-taxable allowances and they filed income tax returns and they started getting refund from the department. Because the income tax department didn't have the database of non-taxable allowances, what your employer is paying to you. So your employer is paying the pay slip to you, government involvement is not there. So the government, no chance for the government to know what are all the non-taxable allowances your employer is paying to you. So what our people did, even though our employer had taxable allowances, at the time of filing the income tax returns, they entered all the non-taxable allowances and they got the refund. The government had a check. No, the employer has to submit the breakups also. Now the employer has to pay the tax, submit the receipt and upload the breakup also. So your entire salary structure is there with the income tax department. Now at the time of filing the income tax returns, if you try to do some gimmicks in your taxable allowances and if you try to enter all the non-taxable allowances and if you have got any intention of getting the income tax refunds, no way, not possible. So this is Part A and Part B. If you, instead of entering the non-taxable allowances 10,000, if you enter 20,000 in your income tax returns, and if you file, government will come to know and they will definitely send you notice. Now, Form 26AS, right? Form 26AS is nothing but the summary of the taxes paid in your PAN number. Summary of taxes paid in your PAN number. I repeat, say a person may be working in Infosys for 6 months, and for the next 6 months, a person may be working in TCS. So Infosys people would have deducted and remitted a tax amount of 20,000. And TCS guys would have deducted and remitted a tax amount of 20,000. Now you have to check how much is the tax amount lying in my PAN number. How much is the tax I have paid? This Form 26AS is useful for you. You can log in your income tax portal and you can download Form 26AS and you can see whether the Infosys people has paid 20,000 or not. Whether the TCS people has paid 20,000 or not. Yes, as per my payslip, total salary, total tax deducted by Infosys is 20,000. Yes, that is reflecting in 26AS. As per my payslip, the total tax deducted by TCS is 20,000. Yes, on 26AS that is reflecting. Yes, my money is not missed out. It is there. It is there. My money is not missed out. Right. There is a query. I'll address sometime later. So this is Form 26AS. Again, there is a check here. Probably after working for 3 months, say every month the company is deducting a tax of 10,000 per month. Every month the company is deducting a tax of 10,000. Say at the end of third month, at the end of fourth month, you may get a doubt whether the company is actually remitting the tax to the government. Whether the company is actually remitting the tax to the government. The company is deducting the tax from my salary, but I have to make sure that the company is remitting the tax to the government. You can check Form 26AS. The companies will be remitting the tax amounts on quarterly basis. I repeat, the company will be remitting the tax amount to the government on quarterly basis. If For the month of April, 10,000 deducted by the company tax. May month, if you check on 26 days, it will not be reflected. It will not be reflected. I repeat, it will not be reflected. The company have to provide the accounts to the income tax department only on quarterly basis. So please don't go and fight with your HR. April month, you guys deducted a tax of 10,000, and May 15th today, I am checking my form 26 AS and 10,000 is not reflecting. You guys are rotating my money. You guys have looted my money. Please don't use harsh words. Please don't fight with your HR. Please wait for 3 months. April, May, June. Probably check in the middle of July. 3 months tax amount would have definitely reflected in your account, in your PAN number. If not, then now you can go and fight with your HR. Now you can go and fight with your HR. Please don't go and fight with your HR instantly. 10,000, you guys deducted my salary for the month of April. May month, it is not reflected. My 10,000 is gone. You guys have looted me. I have donated 10,000 to you guys. Please don't use those harsh words, because that reflection would happen once in quarterly basis. So April, May, June, probably July 15 or July 20, if you check your income tax portal, if you check your form 26 AS, it would have got reflected. This is the real-time check what you can do to make sure that your company is paying the tax in your PAN number. Got it? Clear? Any doubts? Any doubts in form 26 AS? Any doubts? Good. So many of the HR professionals are feeling satisfied. Great. So please don't go and harass your HR, because that happens in quarterly basis. Right? Great. Now let's check some queries. Now let's move on to the next thing. Filing of income tax returns, salary. This is what we will be doing finally. So this is like directing a movie. Just we sitting here at our comfort, just we sitting here in our home, we can straight away comment the people, we can straight away comment the film people, at least sitting somewhere and he is just looking the monitor and he is telling all sorts of things. But being the director, you are supposed to know all the fields. Then only you can direct a movie. You should be having a little knowledge about camera. You should be having a knowledge about script. You should have knowledge on dialogues. You should have knowledge on lightings. Similarly, if you are going to file the income tax returns on salary, you should have knowledge on all the provisions. Unless and until you don't know the provisions of salary, or at least you should have a fair idea of the provisions of your own salary. If you're trying to file your own income tax returns, at least you should have a fair idea on the allowances, whatever listed in your own payslip. Without even having an idea of what are all the components included in your payslip, without even having a knowledge of what is happening, if you try to file the income tax returns and if you curse the income tax department, then it cannot be justified. You are doing a flaw. There is a big flaw in your side. You are not justifying. You need to have the adequate knowledge. If a software professional, C++ professional, just by knowing the codes, he cannot do. Just by memorizing the codes, just by memorizing all the points, he cannot do. He need to understand the client's requirement. Similarly, you need to understand the provision, you need to understand the structure, and then only you can go ahead with the filing. Because probably, I believe many of you might have been wondering, probably many of you might have been wondering, what is this fellow have listed, have titled it as a filing of income tax, but as of now this fellow hasn't spoken anything about filing of income tax. He has been speaking only about salary. Yes, because unless and until you get the fair idea about salary, unless and until you get the fair idea about the income tax provisions, it is absolutely impossible for you to file the income tax returns. So application of knowledge on how to file the income tax returns. If you have salary income alone, if you have only salary income plus rental income plus interest income, you can use ITR 1. There are a lot of forms. After this session, you can check in Income Tax website, Income Tax India e-filing website, Income Tax India e-filing, download ITR forms. You can find many forms, ITR 1, ITR 2, ITR 3, like that. It goes up to ITR 7. And each form is meant for separate class of people. Each form is meant for separate class of people. If you are a salaried person, and then if you have rental income and if you have interest income, you can file it in ITR 1. If you have any other income, any other business income. Many of you may be doing business also. Say you are employed in a concern and you are doing share trading also. No, you cannot file ATR 1. If at all you are interested in disclosing that share income, you cannot file ATR 1. Sir, why I am going to disclose my share income and all? That is something between me and my broker that even my wife doesn't know. Why should I report to income tax department? That is up to you. If at all you don't want to report it to the yes, sir. Any doubts?
I'm having a doubt.
Yes, sir. Please.
Okay. Actually, I'm working as a executive in a HR operation in a company. Okay, I used to process salary for more than 1,000 employees per month. So many clients.
Great.
And the thing is, I used to get so many queries each and every month regarding salary and as well as income tax like that.
Yes.
Salary part, I can handle them. Okay. And income tax, it means I know a little bit, very little bit. And enlighten me that whether how much this course will help me out regarding all these things, income tax, regarding income tax, how they are doing in how they are filing all these things, how much this will be helpful for me to either for myself and as well as how it will be helpful for me to handle all those queries which I'm getting.
Yes, sir, perfect. The objective of this session is to equip you people to handle all the queries with respect to salaries. So the objective of the upcoming session is to equip you people to understand the basic provisions of income tax, what are all the queries you people get from the employees and how to tackle, how to file the income tax returns, and what are all the general challenges, and what are all the, just for an example, if at all an employee is getting a notice, that notice thing is something personal between the employee and the income tax department. But still, that guy will come to you as an HR, sir, I have received a notice, you guys have done a blunder, please explain me. That thing happened. Just because that fellow has received an income tax notice, it doesn't have anything to do with HR professional, and you are in a position to answer him too. And the upcoming session will be helpful for you in that sense also, sir.
Okay.
So everything end to end with respect to salaries, I believe that the upcoming session will be really helpful.
Excuse me, sir. I have one question. If I have a salary income, as well as some part of agriculture income because of ancestral property, can I use form number 1?
Yes, sir, you can. ITR 1 or probably agricultural income. Yes, exempt income there. Very recently, all the forms have been refined. But I believe that the recent year income tax returns, ITR 1 form have been equipped to include the agricultural income also. If you don't find the agricultural income option, the exempted income option in ITR 1, you can comfortably go for ITR 4.
Sir, can I take the ancestral property agriculture income?
Ancestral property agricultural income. Now ancestral property means the property have come to you, right? You are the owner.
Yes, sir.
You can.
But I heard that for that I have to have another PAN number and I have to apply a return separately.
No, that is HUF. You're talking about HUF, ancestral property.
HUF.
If the ancestral property, the partition has happened and your share you have received, then comfortably you can do it in your PAN itself. If the ancestral property is remaining undivided, it is common still among all your brothers, then you cannot do it in your income.
Okay, thank you.
Got it, sir?
Thank you.
Okay, sir. Clear. So, right, let me continue. So the application of knowledge and how to file the income tax returns. Yes, you need to apply your knowledge. Unless and until you have the background knowledge, you cannot do the income tax, or probably you are not justifying your profession. You are not justifying your pay slips. So apply your knowledge. And yes, we'll be seeing the general errors, whatever people commit while filing. And then tax payable and tax refund. Right. Now, yes, if at all you are employed in a company and you have got share income also, yes, you need to use ITR 3 or ITR 4. If at all you have to report your business income also, apart from your salary income, if you are doing any other business and if you are interested in reporting, you have to report. As per the law, you have to report. If you have a business income in addition to the salary income, then you have to use ITR 4 for filing the income tax returns. So similarly, ITR 5, ITR 6, ITR 7, 5, 6, 7 and all for companies. For individuals, ITR 1 to 4. And yes, based on your income, you have to choose the ITR form and you need to file. Right. Now the tax payable, tax refund. Sir, I get many queries from the people, sir. I'm paying the TDS, but still at the end of the year, the income tax people are asking me to pay the tax. Every month, 10,000 is deducted from my salary, but still at the end of the financial year, if I work out the income tax returns, the software is showing me, asking me to pay a tax of 12,000. How did this happen? Yes, there are certain instances which may result in those circumstances, like probably you might have missed out reporting certain income, or probably the company might have missed out certain income while computing the total income. So like many instances are there why that circumstance is coming. And similarly, tax refund. Yes, the tax refund, as we discussed in the initial part of the session, if you are missing out certain investment proofs to the company, and if the company is not ready to give credit to those investments, then don't worry, sir, I invested 1 lakh rupees, my company is not accepting, that's it, gone, I have to pay additional tax. What is this, sir? I invested but still the benefit is not given to me. Don't worry, let the company file the tax returns, and let the company file the TDS returns, and let the company issue you form 16. Don't worry, after the end of the financial year, you have got time. At the time of filing the income tax returns, you properly enter all your investment proofs, you properly enter all your deductions and exemptions, and yes, your tax income, the excess tax whatever deducted by the company, will be refunded to you. Yes, it will be refunded to you. So yes, how can we claim later? After the end of the financial year, at the time of filing the income tax returns, you will be filing the income tax returns, you will be working out the revised tax, you will be working out the total income, you will be working out the tax, and you will be comparing with the tax what that is deducted by the company, that will be adjusted, and the remaining portion will be refunded to you. Say if the company has deducted a tax amount of 90,000, and at the time of filing the income tax returns, by using all the deductions and benefits and exemptions, if the revised tax amount is coming to 80,000, then don't worry, 10,000 will be refunded to you by the income tax department. Clear? And after rectifying all the errors in the income tax returns, after satisfying all the income tax returns queries, you will be filing the income tax returns, and get ready for the notices. Yes, you will receive certain notices, but not all the notices are alarming. Not all the notices are alarming. Please don't worry. Please don't panic. The moment you receive the income tax notice, people get panic.
Sir, we can't hear you.
Hello. Hello, sir. We are not able to hear you. Just a minute, people. We will just see it. I think there's some connectivity issue. We'll just wait for some time till the presenter joins.
I'm sorry, there is a disconnection from my end. I'm sorry for that. So that's it. We have come to the fag end of the session. That's it. We have come to the end of the session. Any queries now? Any queries?
Yes, one query. I have bought a property in which there is two proprietors, and the interest of the loan which have taken by the two proprietors have the benefit given by both the two proprietors or only one, and what amount of which?
The proprietor. Can you please come again, sir? I'm sorry, I couldn't actually.
Actually, once again. एक्चुअली प्रॉपर्टी में दो लोग हैं और दोनों ही उसके मतलब रजिस्ट्री में दोनों का नाम है
Okay.
और दोनों सैलरीड पर्सन है।
Okay.
हाँ, तो उसमें जो इंटरेस्ट में जो रिबेट मिलता है वो दोनों को मिलेगा और वो किस अमाउंट तक मिलेगा?
Okay. Interest from what, sir? Interest from?
Interest from loan means
Okay.
loan interest.
Okay, if you have jointly taken the loan, proprietorship is something different. If you have jointly taken the loan, if the loan is both of yours name, then you can divide it based on the share of the loan, you can get the benefit. Say if the share on the loan is 60-40, then the benefit on the interest is also 60-40. If the share on the loan is 50-50, then the benefit of the interest is also 50-50.
And the maximum limit?
Maximum limit on housing loan, sir?
Yeah.
2 lakhs, 2 lakhs, 2 lakhs.
2 lakhs for each?
No, 2 lakhs put together. 2 lakhs per property.
2 lakhs for full property?
Yes. Okay.
Thank you.
Yeah, right. So anything else? People have shot out some queries in the chat session. Can even partial month HRA can be claimed? Yes, even the partial HRA can also be claimed. As long as it is falling within a particular financial year, you can claim, no issues. Right? Clear? I think we have come to an end. Wonderful session. I really enjoyed the session. I hope that you people also enjoy the session. If at all you have got some queries or if at all you have got some clarifications or anything, you can get in touch with us and we are always ready to help you and to assist you. Alex, sir?
Okay, yes.
The floor is on you.
Okay.
You have got
Okay, so thank you, sir, for this wonderful session. It's been an interactive session. I think most of them had a lot of queries, but you patiently answered all of it.
Yes,
so I
thank you.
think we had a lot more insights on income tax. For you people to give you a clarity, I think as when you talk about income tax, it is something that cannot be dealt in a single day or in a single hour. Maybe that is not sufficient. Maybe you would have seen there are a lot of scenarios, there are a lot of situations on how it arises, right? So to get more insights, you have an upcoming webinar. I think most of you would have known about it, but let me just share you the upcoming session. So this is our upcoming session, which is coming on Wednesday, which is on 24th till 28th. We have this as an extensive program, which is being dealt by same Satya Harsha sir, who will be joining us for this session also, where he will have more in-depth insights on what are the workings which is being done, and there will be a lot of focus areas where we will deal it across. As sir was saying, it will be useful for both of you, even if you are a HR professional or if you're not, that is not matters, but you are a employee, because any single individual pays income tax, so he also needs that to understand. And probably you might need a professional person to understand that. And I think sir will be the right person to have a lot of questions. I think this is how the session pattern will also work. Maybe some of you would have been felt that it is a more technical thing that probably I cannot understand, but you would have seen how the session flow works. It is something that even if you don't know anything about that, also you can have a lot of learning from the session, right? It is a very extensive session. I think what we have just told today is just a crisp, it's just the objective on how these things would work. But the Wednesday till Sunday session will be a very extensive session, and if you see the timing also, it is in the later half, probably in the evening. And every day, as this session is being recorded, every day you will have the recordings of the session, and there'll be a lot of materials which is being shared across with you, so that you can have a lot of insights. And the program cost also, if you see, it's just 999. We are just offering at a rate of 999. I think most of in this group also would have attended about our webinar, right? So there are a lot of people who have seen our webinar already. So I think they know how the value added thing that we will add it across, right? So I will also post you the previous comments also, what we have got from previous webinars. So and it has been always we are catering to the audience requirements. So and if you have not registered for this webinar, you can register, and this is a very limited participant webinar. Only 50 seats are available for this, because we don't want to have more people. The reason behind is there can be an individual concentration. So it is a 50 seater webinar. So the more first you are, then you have things coming in forward, right? So we will post you the registration link for this webinar today in the groups, in the WhatsApp
Yeah,
group that
share it.
you have.
Thank you.
Maybe all of you can register that. You will all see the guidelines on how that is working. And as you see, really it will be a value added at this time of pandemic. I think during this lockdown and all this is the time you can probably use this to learn all this, because there's a space that we have got. Maybe we can use it for to learn something that an expert is coming in, and probably you can have it is a completely an interactive session. Of course, there's not be much of hiccups. Definitely you can do that also, right? So this is from our end, okay? And any other clarifications about the webinar? Anything else that you would like to add it across? Are we fine? Yeah. Anything else would people like to ask?
No, nothing. It's good actually.
Fine.
Hello,
Kindly share
sir.
the link. Register.
Okay, sure, definitely, Ramesh. We will share you that also. The poster also is being shared. Yes.
Yeah. Thanks a
Yeah.
lot.
Hello, sir. Can you
Yes.
hear me?
Yes,
Hello.
actually. Yes. Tell me.
Yes, sir. It was actually a very wonderful session, very useful for our students. I just have one doubt. It was like shared in the Form 16 slide about, and he also told about the HR things which has to be done. Could you please repeat that part alone, sir?
Yes, the part A and part B you're telling, ma'am?
Yes, sir. In slide 6, you were explaining about the HR.
Yes, ma'am. See, right. This part okay.
Yes, sir. You can continue.
Yes, sir. The HR people actually they deduct tax, but they may be remitting it. They may be remitting it on a monthly basis, but still that will not reflect in your PAN number immediately. It will take a minimum of 3 months for you to see in your PAN number. Say every month 10,000 is the tax deducted in your salary. Say April, May, June, 30,000 that will get reflected in your PAN number only in July 15. Say if April month 10,000 is deducted and May 15th, if you check your form 26AS in your income tax portal, it will not be available. So please don't go and fight with your HR, because it will take a minimum of 3 months to reflect in your PAN number. And the form 16 part A is nothing but the receipt for payment of tax, and part B is nothing but the breakup of the salary, allowances, what are all the allowances, everything is there in the income tax department. So you cannot act smart at the time of filing your income tax returns. You cannot include non-taxable allowances, and you cannot claim refund from income tax department, because your HR has already reported the salary structure of you to the income tax department. So if you file your income tax returns, the income tax department will match the allowances. Whatever allowances you have reported will be matched with the allowances whatever your HR had already reported. And if that is matched, the return goes through clearly. If that is not matching, say if your HR had already reported a taxable allowance of 1 lakh, and if at the time of filing your income tax returns you are entering a non-taxable allowance of 50,000, system will not accept. Probably at the time of filing it will accept, but at the time of processing it will not accept, and it will raise error. You will get notice and you have to face the consequences.
Okay, sir. Very clear, sir. Thank you so much, sir.
Thank you. Thanks.
Thank you, sir. It was a very amazing session. Thank you so much, sir.
Thank you so much. Thank you.
Okay, so I hope I think all of you have got a lot more. Maybe there are a lot more things which we can deal it across. Maybe we are ending the session as of now. Maybe if you have any queries, you can post it in the WhatsApp group also. I'll be also sharing the upcoming registration link also, and Sarah is also available in the group. Maybe if you want to have anything, we can do that.
Yes, you're
We
welcome.
can
You're welcome.
definitely, yes. So thank you for it. Okay, so hope to see you all, maximum people joining us on Wednesday webinar, and to get more insights. And thank you, sir, for this session. Really grateful to have you on board. Yeah, okay.
Thank
So
you,
thank
sir.
you
Thanks for
all.
the wonderful
Thank you all. Have a nice evening.